Between the cycle level and the trend line, which one do you want to go with first?
Okay, let's go with the cycle level first, then we go to the
Go with it.
trend.
Alright, let's go with cycle levels first. Alright, cool. So when you're dealing with cycle levels, do you understand what psychological levels are?
I watched your video and it was all about round numbers.
Yeah. So psychological levels, they're all about round numbers. You're very correct. So the reason we look at these round numbers is very simple. So for example, so the understanding is people, or like just people normally, people or traders, they tend to react around round numbers. So for example, if you have 1000, it's a round number. 1500 is a round number because of the 500, right?
Yeah,
10,000 is a round number. 100,000 is a round number. And let's say 10,500 is a round number as well. So because of this, so these are all round numbers. And the general idea or the general understanding is most traders tend to react around these prices. So they're looking for buys, they're looking for sells, or they're looking for reactions around this area. Now, the whole concept about around psychological numbers is something that has been in existence for a very long time. So it's not just about the market. People use this same principle like with normal day-to-day activities. When you go to stores and you're trying to buy, it's very easy for you to price something at 1,000, let's say £1,000, yeah,
yeah.
compared to you saying you want to buy this stuff for 9,000, for 9,000, let's say for 9,150. So it's just easy to say, okay, I want I want to go in with, let's say, £1,000. So at this point, it's very easy compared to you looking at 9,150 or
Yeah.
maybe 9,111. You see, so it's always easier for you to do transactions at those numbers. Now let's take another example. If you're trying to get some money from me, and let's say you need 9,113. Yeah, let's say you need 9,113 pounds, and you're trying to get this money from me. Will you ask me for 1,113 pounds, or you ask me for a thousand?
I would definitely go for 1,000.
You go for 1,000, so you're just rounding it up to the
Yeah.
round number. So it's very easy for you to transact at these round numbers, and also just for your bookkeeping thing, because if you have it at £1,000, it means it's easy for you to remember the whole number thing. And when you're
Yeah.
trying to pay, so if you're getting money from, let's say, 5 people, it's easy to say, all right, I got £1,000 from person number one. I got maybe I got maybe 500 from person number two. And so it's easy this way compared to you looking at person number one, you got 9,113, and then person number two, you got 800 and let's say 312. You see, so if you start using numbers like this, it becomes very difficult for you to keep like proper tracking compared to you just going with the round numbers. So the round numbers is not just something that you're looking at in the market. You're looking at round numbers in every day-to-day activities. You know, even the Uber thing, when they're driving, sometimes when they start the meter thing, it's always starting on the round number thing too.
Yeah.
Like you get in the Uber thing and there's a fix, so it starts already at the round number thing, and then it
Yeah.
starts going. So you see, everybody uses like the round numbers. So banks and institutions, they're using round numbers as well. Maybe for transactions, maybe to balance the books and everything. So once you have this understanding, it becomes very easy. Now you understand people are looking at these round numbers, transactions are taking places around these numbers, so it's easy. So now we can take it from here and say, okay, now we understand this, so let's build something from this. Yeah,
Yeah.
so let's build something from this. I'll clean this. Perfect. So now you understand this. So the first thing is, how do you plot this How do you plot these levels? And this is something I've explained countless times, but I'll do it with you again. We'll just go through real quick. So the first thing is you need to understand what makes your psychological levels correct. So the first thing is when you're plotting these levels, you need to pay attention to certain things. So if you have your psychological levels right here, there's certain things you're looking for that you need to pay attention to. So now the first thing is the distance between the psychological levels. You need to make sure the distance is equal between the psychological levels. That's one thing. And then the next thing is between the psychological levels, you need to see some kind of price action. You need some price action between your psychological levels, correct? So I'm going to show you this. You need some price action between your psychological levels. The distance between the psychological levels has to be equal. So once you have this basic concept or this basic this foundation blocks, it becomes easy. So now the wrong way for you to do it, or the way people normally do it. So when they pick a chart like this, the first thing is you might see people put in psychological levels like this. So they put in these levels around areas where prices reacted. So you see something like this, correct? So you might see somebody doing this, and then they're looking at this area, and the new price reacted from here, giving you this buys to the upside. So they're looking at this area, and then they will look for the round number around this area. So they'll probably come here and look for 95,000. No, that's 95,000. I just put 9500 like this. So they'll look for a round number around this area, which is not the right way for you to do it. So they'll come here and look for the round number around this area, like 1,000, like so. They'll look for a round number here. So this is 49. They'll put 1050, something like this. Are you seeing? So this is what people normally do. So they're looking for areas where price is reacting from already. So you're looking at this, you're seeing a reaction here, you're seeing a reaction here, you're seeing a reaction here, and they look for the psychological levels around this point. So normally this is not the best way for you to do it. So the best way for you to do your psych levels, or the way I do it, because in as much as I'm saying this is the way I'm doing it, it doesn't mean what they're doing is wrong. It just means they're looking at it differently compared to me. So I have my own approach to doing it, and it's very okay for it to be different from what any other person is doing. So personally, if I take out these levels, so we'll take out these levels right here. We'll take out these levels, and once you understand from the explanation I showed you already, the psychological levels are simply round numbers. So if you understand what these round numbers are, when you plot in these psychological levels, you really don't need to see the price action. Even like you don't have to see these candlesticks, correct?
Yeah.
You don't have to see the candlesticks. So you can hide these candlesticks, and you still have the possibility to plot these levels on your chart, correct? So the first thing is you can highlight on this, on the chart thing, and you hide it. Now your main focus at this point, you're looking at the time frame thing. So this is EURUSD on the daily time frame. You're paying attention to 1.2000. You're paying attention to 1.1800 and stuff like this. So these are the prices you're paying attention to. You see, so these prices right here, everything you see here is going to determine the levels you're working with. Not necessarily the price action thing. Correct?
Yeah. Okay.
Alright, cool. So once you have this set already, now you can, so I'll clean this again real quick. So now the next thing you do is you put the first level. So just put this level here, and when you put this level, it's the first level you put in on the chart. So you can put it randomly, so you can drop this level anywhere. I just want to put it, let's say, somewhere here, correct? You drop the level here like this. Once you have your level, plot it like this. You take it to a round number, so let's put 1500. like this. So that's the first level thing, right?
Okay.
So I'll copy and paste and get the second level. So
And do you do only odd numbers or sometimes you do even numbers?
now it depends on the it depends on the price as well, or it depends on the pair I'm working with. Remember, we need even, like, the distance between the levels has to be equal. So you're looking at equal distances, and you're also looking at the price action between those levels. So because of that, I'll plot the levels first. So let's say the first was 15,000, right?
And
1.15
why did you
thousand.
choose? Why did you 15,000?
It's just random. It's random. So we can
Okay.
switch it. So let's choose, let's say 22,000. So let's choose 22,000 for example, right? So let's say the first level is 22. You see?
Yeah. Okay.
That's random again. It's random, but it's a round number. So 22 is a round number, correct?
So that means I can pick 14,000, 16,000, 18,000.
Yeah, just the first number is a random whole number. It's just a random,
Okay. Cool.
just random. Yeah. So
Yeah.
you can choose 22. You can even take 20,000 for example.
Okay.
So I can still edit this and just put 20 like this. You see, it's just random. So I'm not even looking at the price. I'm paying attention to. I'm not looking at the price action. I'm not looking at the candlesticks. I'm just paying attention to the price. The price. So it's 20,000. So for example, I have 20,000. So give me a level above 20,000. That's a round number.
Okay. I'll go 22,000, 24,000.
22. All right, let's do 22,000. So you have 22,000 above 20. Now give me one below 20,000. If the value above 20 was 22, what would be the value below that?
18,000.
Perfect. So you have 18,000. So right here, hold on, I need to copy and paste this. So we'll do 18. All right, cool. So you see we have 3 levels in already, correct?
Yeah.
All right, perfect. So the next question is the distance between this level and this level, is it equal?
Yeah. Very
It's equal, right?
Yeah.
So you're spacing of about what, 2,000 each. So
Yeah.
2,000 points between each of these. So that's correct. So the distance is okay. Now the next thing is, once you've plotted this with just the random numbers, your first random number was like 20,000, and then the next was like 22,000, and then the one below it was like 18,000. You have to bring back those charts. So you're looking at this area right here. So you're looking at this area. You see this thing right here. So use it to bring back the charts. I'll just place it like this. So let's see. So I'll bring back this chart right here. So now you bring the chart in and you're still on the daily time frame, correct?
Yeah.
So perfect. So you're looking at this on the daily. Let's run this through to the recent price action thing. All right, so look at this. So you remember the point I mentioned before? The distance between the psychological levels has to be the distance between the psychological levels has to be the same.
Yeah.
And you need to see some price action between the psychological levels. Now the question is, when we talk about the price action between the psychological levels, there's just 3 ways I look at price movement. So you have price making higher highs and higher lows, which is just you're looking at an uptrend thing.
Yeah.
You have a consolidation, right?
Yeah.
And you have a downtrend, price making lower lows and lower highs. So this is what I'm looking at. So I need to see these things between my psychological levels, and I'll explain to you why this is very important. So you're on the daily time frame. In this case, I'm using the daily time frame because currently I'm using the daily time frame as my highest time frame. So it's very important you plot these levels on your highest time frame. Yeah, you plot these levels on your highest time frame. When you have the levels like this plotted on your highest time frame, you need to see some kind of price action. So when I'm talking of price action, I showed you already, price making higher highs, higher lows, higher highs, higher lows, or lower lows and lower highs. The reason is simple. If price is moving from this psychological level to this psychological level, it's very important you see some price action between these levels, because then you can appreciate price moving to the upside from one level to the other, and you can step down to lower time frames, and for every pullback that comes in, you're looking for possibilities to join the wave thing.
Yeah, to enter.
To go in. Yeah. So that's why it's very important for you to get some price action between the levels. So it's not just okay for you to see the levels like this. So normally, just looking at this. Sorry. So normally, just looking at this, the levels look okay, correct?
Yeah.
So just looking at this, the levels look okay. So without even doing too much, you can see price reacting around here, and there's a movement to the downside. You can see price reacting around here, and there's a movement to the upside. And you can see price reacting from here, and there's a movement to this side. That's fine. That's okay. But not every psychological level makes sense on every time frame. Not every psychological level makes sense on every time frame. So now let's do this. Let's flip this a little bit and just make it look better. So we'll clean this. So because we're looking for the interaction thing between these levels, I'm going to stick to what, 20,000, and I'm going to hide this again, correct? I'm going to hide this. I'll hide the chart again, and I'll modify these levels. So I'll keep the first level thing at 20,000, but then I'll take this level here of 18,000, and I'll say show me this at 10,000, for example, down here, right?
Yeah.
And I'll put this at 30,000. I'll put this at 30,000. So now I'll space these levels out like this. So remember, when you had it before, we did 20,000, we did 22, and we did 18. But once you had the chart in, you couldn't really see the price action thing, correct? You could see price reacting at these levels, but there wasn't like the price action thing. So we need that price action. Now, if you space these levels out, so I'm doing 10,000, I'm doing 20, and I'm doing 30. So if you bring the charts back, can you see now?
Yeah. See it.
So if you put a trend line thing here, for example, you have some price action you can work with. Price is making highs, pulling back. Price is making highs, is pulling back. And price is making highs, it's pulling back. Correct? So when you step down to lower time frames, trust me, you have crazy things to do. So as you once you identify price moving to the upside on your daily time frame, on lower time frames you're waiting for this pullback to come in and for you to take the swing. And that's why you look at most of my analysis, I hold my positions for a little bit longer. Why? Because of this simple step. So before, I'll have my cycle levels very close together. Like I'll probably have 20,000, 21,000, 22,000. So they're very close together. And when you scale down to lower time frames, it becomes difficult for me to hold the positions longer. I found myself seeing positions in, but I'm holding those positions maybe for like a day or two. And sometimes the risk to reward as well is not like perfect thing for me. You see, but if I have something like this and I get in here and I know the rejection at this point means price has to move all the way to this level, all I'm waiting for is an impulse. I'm waiting for the pullback and I'm waiting for the next impulsive leg. So if I get in here, for example, so let's put this. So if I get in around here, you see how beautiful this looks like.
Yeah.
I know I'm headed to the next psychological level right here. So if you have a job thing, mate, like you can get the position like this. This is like 1:5 and you go to work.
That's all.
That's all. So you can get this position in, let's say, on the Monday or Tuesday. When was this trade running? This was on Wednesday 8th of July 2020. So you put your trade in and this completed around so this was July 12th, right? So take note, this is like the daily time frame thing. So this is July 12th and it completed the move around September 2nd. ish.
How many pips?
I don't look at the pip thing. I always go with the percentage.
Okay.
So my focus right here is on the percentage thing. So from here to here is 1:5. So that's 5%. And that's good because within this entire move, when you step down to lower time frame, this is just your initial position right here. Your first position right here is giving you 1:5. On lower time frames, let's say the hourly time frame is where I get my entries. You will see minor pullbacks within this area. You will see minor pullbacks, and you can probably scale in and get 1 or 2 entries again. So a move like this on the daily time frame that's giving you 1:5. If you get a perfect entry again on the hourly time frame for a scaling, you're looking at maybe 1:10, 1:12 on this entire move thing like this, if you get in properly. So that's why I'm looking for the price action between the levels, because then it makes it easy for me to hold these positions longer. And I'll show you something again. So look at this piece right here. Now, do you see how different it is as well? You see how beautiful this is? So price tries to go above this point and then it comes back in. So I'm looking at this. So I'm sat here. If I was trading this, I'll be sat here looking at this. I'm like, okay, we went through 20,000. So normally the expectation is for prices to go all the way to 30,000. But then there was this inability for prices to go all the way to 30,000 and we dropped back below 20,000. So common sense, where is price headed to next? It has to be here, correct?
Yeah.
So now you see the price action thing. So all you have to do is wait for the pullback to come in. You're looking for entries again on lower time frames, and you don't have to hold this all the way to the next psychological level. You don't have to, but this is what you're looking for, something like this. And this is a daily time frame thing, but you're not trading off of the daily time frame. I'm just showing you this on the daily time frame, for example. So on the daily time frame, even if you was using the daily time frame, this right here is 1:7.
So that means that it's almost 7%, isn't it?
Yeah. 1:7. So there's 7.58. So if you was risking, let's say £1,000 on a 100k account, you've made what, 7,000. So you're like 0.5% away from getting phase 1 completed, and this is without you even doing anything complex. So just looking at prices where you have a 50% chance of almost succeeding, and you're not looking at the entry. There's no entry technique thing with this one. It's just you looking at these levels, understanding where price is going to. So the reason I use the psych levels is just for me to get the, how do you call it? When I use the psych levels, it's just for me to get the like the directional bias thing. So where price is headed to.
Yeah.
That's all. So the same thing. Once price drops below 10,000, right here, I'm looking for the next level below this, below 10,000. If price goes above 20, I'm looking at the next level above that.
Okay.
Does it make sense?
Yeah.
Perfect. So let's put this level here. I'll put 9,000.
So with the psychological level, where do you predict this price is going? Will it come up or it will go down to 10,000?
No, here's my next level. So here's the next level thing for me. 1.000000 flat, correct?
Yeah.
So here's the next level thing for me. So just looking at this, where do you think the price is headed to?
1.00000.
Yeah, 1.000, unless something happens.
Yeah.
Unless something happens. Right? Now, this doesn't work like 100%, but at least it gives you a 50% chance of survival. It's just a directional bias thing. So just looking at this, price is headed to 1.000. 0.0000. And if price rejects at this point, it's going to come back to this level. If price rejects at this point, it's going to go to the next level. If it rejects at this point, it's going to come back here. And as it keeps playing this thing, it's like a ping pong thing, isn't it? So you're looking at this, all right, cool. It's rejecting here, going here, rejecting here, going here. It's just a directional bias thing for you. Now, all you need to do is wait for price to give you the move. So you're waiting for the impulse thing.
That is perfect. That is perfect because your job is to just sit down patiently, then you wait for the price to hit your psychological level, isn't it?
Yeah, or you're waiting for, so you're waiting for the reaction. So the first thing is you want prices to get to the psychological level thing. You want to see price, let's say, moving above it. So at this point, once price was here, once price pulled back to an area like this, my anticipation at this point will have been for prices to go to the upside thing. You see, okay. But at this point, I'll say if I had to trade in at this point, I'll probably have taken a loss, which is fine because maybe at this point I was anticipating a move to the upside. Correct? I was anticipating a move like this to the upside. Yeah. And that's fine. So every now and then I'll take these losses, but again, so probably I was looking at something like this. So it didn't work out, right? So I'll take this out and then I'll ask myself, all right, what's price doing currently? So once I see the inability for the buyers to continue this move to the upside, especially if I've taken a loss here and I see price trading below this side level again, and I see this pullback thing, rest assured I'm stepping down to lower time frames and I'm looking for something like this to the next side level thing right here, something like this. So you see you have maybe a 50% chance of surviving if you just look at price this way. And this is without even looking at setups. This is just going off of what price is telling you with a side level thing.
Okay.
Correct?
Yeah.
Perfect. So if this makes sense, that's it. That's how you look at a side level. So I've shown you guys something again. It's just called understanding the, like, you need to study the distance. So once you have price action between these levels, sometimes I like studying it. So let's say, for example, there's this tool I'll show you. It's called a dead range tool. Let's see, dead range tool. So I'm going to show you where it is. Let's see. Hold on, let me see. Here. So here, can you see this?
Yeah.
The dead range. So it's under the, it's right here. So the dead range tool. So if you take this tool, it's something I like to use like all the time. So let's say you're looking at this level right here. You're looking at this level. So you're looking at the level between 10,000 and 20,000. You can use the dead range tool, something like this. It tells you how long price took to travel. So you're looking at 98 days from here to here. That's it, 98 days, correct?
Yeah.
All right, you can do the same thing. So once price starts moving to the downside from here, how long did price take? So now price took 261 days. So you start understanding. So it just tells you, like, if the price is moving like impulsively, you're looking at almost 98 days and you're done with that, with that range thing. But once you start having consolidations above 98 days, you should know there might be a problem. So what I like to do is put it on multiple points just to understand. And again, it's not supposed to be like that precise. It's just giving me an understanding. So this is taking like 489 days, correct?
Yeah.
So when I'm doing something like this, I do it on multiple areas just to understand. I'll show you something again real quick. So let's put it on multiple areas and I'll show you. So here, 106 days. Now you start seeing some similarities and you start seeing some differences as well. So let's put this on multiple areas right here. 63. Cool. So let's put this again here. 120. So if you ask me, and I'll tell you, with these levels we've picked, 110, 120, 130. When the price is trading, I mean like perfectly trending, when the price is trending perfectly, you're looking at periods of about 120 days, 63 days, and 90. So anything between this period is you're having a good trending period, you see, and areas like this. So 100. So you see this price action, it's easy, right? You look at this price action right here, same thing. It drops between, let's say, within 120 days, price drops. You're looking at this, price drops. So you're looking at this 63 days, everything cleared out. You're looking at 120 days, everything cleared out. So once you start looking at this, at these interactions like this, when you have price going above 120 days, rest assured you run into so much consolidations or so many slowdown. So you look at an area like this. So now you put the range thing. So you're looking at 120 days. It's normally supposed to be here. So within 120 at least, or something like this, you're supposed to have cleared this area, correct?
Yeah.
Just going over what the other areas have been showing you, like when it's trending properly, 120, 100 days, 90 days, you should clear this. So you sat here looking at this, and you're in already, and let's say 120 days, and price hasn't gotten to this point, so it tells you already, be prepared. You're probably seeing what that consolidation thing, and that's why it keeps extending again. So there's an easy way for you to anticipate consolidations coming in, and that's why it took this long to get here.
When you see some consolidation happening, like do you lose a position, or you still be in the trade and wait for it to hit your perfect target?
Now, once I see a consolidation, and I know I'll be sat in a consolidation for long, you can close it.
Okay.
Yeah, you can close it because there's no reason. So just imagine you sat in this for like 485 days. That's a long period, man. That's crazy long, yeah. So what you can do is you can close it and take note. This is on the daily time frame. So I'll explain something to you real quick. When I see a consolidation thing, let me take this out. So when I see a consolidation thing happening like this, so you see this period of consolidation right here. So during this consolidating phase, I'm going to be looking for sells here, and maybe sells here, and maybe some buys here, and some buys here. But this is a little bit too complex, or it's not really complex, it's just a little bit advanced for me. So now because I can tell we're no longer trending, and we're coming into a consolidation, and that's why it's important. You need to see price action between your levels. So if price comes impulsively to the downside, and I'm waiting for the pullback thing for price to drop, and I know as well price is supposed to take 100 and something days to clear this off. Once I see price going above 120 days and we've not cleared this, I know we're probably coming into a consolidating phase. So I can exit my positions and say, all right, show me this consolidation so I can trade within the consolidation thing.
Okay.
Yeah, so it's just a lot you can do. And sometimes I'm just looking at it like every other person, and I only realize when the consolidation has formed properly. But there's certain times when I'm really sharp and I'm looking at it properly, and I can tell before it even comes in. And I'll exit and then wait for the consolidation, trade within the consolidation, and then anticipate the move again to the downside thing.
Okay.
So at this point, at least, do you have a perfect, not perfect, but do you have a better understanding of the cycle levels, the way I look at it, and the way I plot this level thing?
Yeah, I get it. I get what you mean about the psychological levels.
All right, cool. So that's it when it comes to the levels. So the first thing is just having your levels. Once you have these levels plotted out like this, it becomes very easy. So the next thing now, you need to just look at so let's extend these levels up a little bit. So normally on my chart thing.
So my question is that if you have this psychological levels plot down, won't it affect your trend lines?
No, because the trend line concept is a whole different concept.
I feel like it can confuse you because you have all these lines going this way and then all these lines going that way. Won't it confuse you?
No. Because normally, when I'm looking at the trend line thing, right? So I have these levels right here. So you can hide these levels if you want to, but I
Okay.
need to see these levels on my chart. Because now I want you to understand something. Look at this. There's two concepts we use, but all these concepts arise from price action thing. Yeah. If price is making higher highs like this and price is moving to the upside, you can use your side level. So you have a side level here, you have a side level here, correct?
Yeah.
It gives you the direction where price is headed to. Now you can put a trend line because you know you're trading within the psychological levels. You have higher highs and higher lows, higher highs and higher lows. So you're waiting for this pullback so you can get it. So it's the same thing. So putting a trend line doesn't confuse me because the side level is simply the direction where the trend is headed to, and then the trend line is just helping me to get this visual representation that yeah, we're still trending to the upside and we're not getting violations. So I don't get confused with the trend lines and the side levels on the chart at the same time. But to minimize, like to make it minimal or to make the charts look clean, I'll put, sometimes I want just 3 side levels on my chart, for example. So once I understand what's happening, I like looking at, so price is currently trading between this 100,000 and 110,000. So I want to see the side level here and one above this. So normally I'll take out this level right here so I can hide that level. You see, so this is how my chart would normally look like. I just want to have 1, 2, 3 side levels and that's it. Now the next thing is I have to put my trend line thing, correct?
Yeah.
So I have to put my trend line. So if I was to draw a trend line here, I'll just put a trend line from this area like this. So it doesn't confuse you.
Not really. No.
It doesn't confuse you. So that's it. So that was my trend line thing right there. So I'll explain something to you real quick. So look at this. You see this impulse from here to the downside. You see the move thing?
Yeah.
That's a swing move for me. Now, if you looked at the previous thing I explained, so with the side levels, remember, with the side levels, we needed certain things, we needed certain conditions. The first one is the distance between the side levels had to be the same, like equal distances. That was the first thing. And the second thing was we needed some price action between the side levels. So look at this, we have equal distances, correct?
Yeah.
Equal distances, this was correct. We had some price action, correct? So that was fine. So that was the thing with the side levels. Now with the trend line, I want you to pay attention to certain things as well. So with the trend line, I want you to pay attention to the time frame. Every time frame has a trend line thing you're looking at. I want you to pay attention to the swing move. There's something called a swing move. And there's something called the pivot point as well. So now this is just how I look at it. And trust me, people can look at it differently. I don't have a problem with that. I'm just showing you how I look at it. So on the daily time frame, I have a trend line thing, right? I have my trend line. Now, why is this a perfect trend line thing for me on the daily or on this time frame? So bear with me.
Do you have separate trend lines on daily and separate trend lines on 1 hour and separate trend lines on 4-hour chart, or like you just use only daily trend lines?
So just like the side level, just like with the side levels, when I'm doing the trend line thing, so let's say I see price moving to the upside like this, yeah, and I see price doing something like this. Oh no, let me do a proper one for you. Do a proper one. So you get price moving, you get a pullback thing, you get price moving, you get a pullback. So let's say this is on the daily, for example, yeah. So let's say this is on the daily, for example, and I have a trend line thing like this. You need to pay attention here. So if this is on your daily time frame, you see this area from here to here, right? This right here is a swing move. And as price comes back, giving you this pullback thing, as price takes off from here to here, it gives you the next swing move right here, correct? So as price goes away from this guy, it's giving you a swing move. So this area from here to here becomes the trend line, the trend I'll be looking at on the 8-hour time frame. So a time frame lower to the daily. So it's a swing move on the daily time frame, because when you look at it sometimes on the daily time frame, it's difficult for you to see the perfect price action thing, making higher highs and higher lows. So I just call it a swing move. And once price pulls back like this, it comes back to this daily area. So once you have price setting this on the daily, you're good to go. So look at this. I'll show you real quick. Let me show you what I'd look at normally. So normally I'll look for a move to the upside. Hold on. So normally I'll look for a move to the upside, right? I'll wait for price to come back and slow down, something like this, and then it takes off. Sometimes it comes back like this and it takes off. Sometimes it comes back and it slows down and it takes off. So this is what I'm looking at on the daily, on my highest time frame thing. Pay attention. When it slows down, it takes off. As it takes off, it sets a pivot point right here. And you need to differentiate the pivot point, because sometimes you see price trying to react from an area like this. I'll show you again. I'll show you another one. Sometimes you see price doing this. You see price pulling back. You see this attempt. It fails and does something like this. It takes off. It comes back. It tries this. It fails. Takes off. Does something like this and it takes off. So during this period right here, it looks like a consolidation thing for me, correct? You're looking at this as a consolidation, and sometimes you just get this. So this is it. This is perfect. So this is something I like to look at, or I pay attention to. So this move right here is a swing move. This move right here is a swing move. So as price takes off from here on the daily time frame, I'll pay attention to this move on the 8-hour time frame. This piece of price action right here on the 8-hour time frame is going to look like this.
Okay.
You see? So the same thing. So this piece right here on the 8-hour time frame is going to look like this. And this piece on the 8-hour time frame, when you look at it on the 4-hour time frame, this piece right here is going to look like this.
So that means that there will be more confusion on the lower time frame, right?
Yeah. So there's more noise on the lower time frame. So you want to look at it from the biggest time frame, and then you scale down to lower time frame. So look at this again. So once you have this on your highest time frame thing. Now I don't trade EURUSD, so I haven't looked at this pair properly. But if I was to do so, I'll just give you let's say, let's look at this easily. So let's come to an area like this. So look at this move right here. I'll consider this move as a swing move, right?
Yeah.
This is not the pivot point for me, because this price did not take out this lows. So my pivot point is here. That's my pivot point. You see? So remember, I told you, price can do something like this. It moved down, consolidation, it moved down, it pulled back, and it dropped. So it can do something like this. So within this entire move, I'm looking at this as a swing move thing, right? So everything here was just a consolidation thing. Then price gave you the next swing move. Are you seeing?
Yeah.
All right, cool. Pay attention. Now it gets really beautiful. Look at the same thing. Look at this. Swing move, massive consolidation, price drop, giving you a swing move. What happened again? Massive consolidation.
Yeah.
So what are you expecting for this area to get taken out?
Yeah, the price will come down to that line.
Yeah, it should. So now you're not only combining the principle from the trend line. You're combining the principle from the trend line and that psych level. So remember, we had the psych level telling us a rejection around 110. We're expecting prices to get to 100,000. Now, when you combine this with the fact that you're looking at a swing move and that consolidation and for price to drop, and this swing move, you're looking at this consolidation, you're expecting prices to drop. So now this is what you're looking at on your highest time frame. Now you can go to lower time frames. So if you go to lower time frames, every swing move like this, you can look at the swing move on the 8 hour.
1 sec.
Yeah,
let's go on.
Yeah, so you can look at every swing move, you can look at it on lower time frames as a new trend on its own, like that.
Yeah.
And it's the same principle. So once you step down to lower time frames, you look at this piece right here. It's going to be, so when you step down, let's say to the 4 hour time frame or the 4 hour time frame or the hourly, you're looking at this piece right here. It's just a minor piece to the entire puzzle. It's just a tiny fraction to it. I don't know if it makes sense. So that's how you look at the trend line thing, and you start combining it with the psychological levels like this. So that's how I look at it. You can extend this here. So look at this piece right here. You look at this drop, yeah? You see this drop from here to here. I'll consider this a swing move thing, right? Now, you look at price pulling back to an area like this. So you took out this area, but it wasn't the best. Like we scratched around an area like this. So if I was looking for a pivot point, I would look at an area like this. Because once we had this price, we came back. I'll even look at something like this, an area like this, because this is what caused the movement thing. So within this consolidation thing, this would be my pivot point somewhere here. Because this is a guy, once price had a reaction from here, then we took out these lows perfectly.
So the pivot points are is where price, there was a brief consolidation and then there was a breakout.
Yeah, it's like, so the pivot point thing for me is where price launches from. So it's like you look at this. Sells inability to take out this lows, sells didn't really take out the lows. Alright, this guy, look at what he did. Alright, cool. Pay attention to that guy. So that's where I want my trend line to go through.
Okay.
So I just need the first pivot point. So once I have this origin, so if I call this the origin, like the start, right? And I get this point, that's all you need. You need this first point and this other point right here. You just put that trend line, you wait for prices, and that's why you see this push here, still this inability. But look at this, once it comes through here, look at, you have to look at this now lower. Oh, sorry. You have to look at this, and it takes out this area now. You see, and we're playing back to the other guy that was up here. So that's how I look at the pivot point thing. Now, people might look at it differently, but that's my approach, and that's the way I look at it. You see?
Yeah.
Nice. So you can do this on all time frames. So for example, again, you can go back and watch the other videos I've done, and sometimes now you can look at the market focus thing I did, and it starts giving you a better perspective. So Anthony, the question is, why do I do something like this? Why do I even pay attention to this? It's an easy way for you to look at price, and it's a little bit stress-free, yeah, because when you have, let's say, when you have the direction thing going up, so that's why now you're looking at two principles here. So for example, let's put this, you're looking at two principles here. The first one, you have a psych level that tells you a rejection or an inability for prices to go higher. You can do the focus thing as well. It's easy. A rejection or an inability for prices to go higher. I'm waiting for prices to then drop to the next psychological level thing here. A rejection or an inability for prices to go higher. I'm waiting for prices to drop to the next level. A rejection or an inability for prices to go higher. Same thing. Inability to go higher. I'm waiting for prices to drop. Now, between my psych levels, I need to see some price action. This right here is price action. So we were trending within this period. That's good. Another price action thing, consolidation. This is very important because you can trade within this consolidation. And as it breaks out, it gives you another price action thing to trade. So as you're stepping down to lower time frames, it's crazy. And do you know the beauty thing is, when you look at a consolidation like this, look at this. You look at this consolidation thing on the daily. Have you ever taken time? I'll make a video on this and show you guys. When you take time and you look at a consolidation, do you know this consolidation is simply a trend with some fixed point? And you can apply the same principle I just showed you on lower time frames as well. Because within a consolidation, what you're looking at on the daily, once you step down to lower time frames, you have a clear trend.
Yeah.
Okay.
For me, I would describe the how I try to describe different from you from yours. I would say that part that you're saying that it's a consolidation. I would say that the price is now in a trading range.
Yeah, consolidation and a range is the same thing. It's just different appellations. I'll just call it consolidation. It's the same thing. It's a range. It's the same. So a consolidation is a range. Yeah, it's the same thing. Yeah. Yeah. It's a range. And ranges are easy to trade. And you know the beauty is, if you understand the way you're trading ranges within an overall trend, this is where you make most money. Like you make crazy money like within this. But people get chopped out within this period, so you need to be a little bit careful as well.
Okay.
Yeah. So that's it. So I think you've seen the psych level thing. So if I was looking at this now, this would be the psych levels I'll use on EURUSD, for example. Those are the levels I'll probably use. That's a trend line thing I'll use like on the daily. And once I step down to lower time frames, I'll start. So for example, let's clean this. So on my daily time frame, if I was looking at this piece right here, price was coming down, and let's say I had this level, this trend line thing. Once I step down to the 8-hour time frame, this piece right here, the swing move on the daily time frame, this would be my trend line thing right here. So I'll have been using these pullbacks on the 8-hour time frame, the 4-hour time frame to look for sales. Correct?
Yeah.
Now, once you get a violation, you know what? If we step down to the 8-hour time frame, let me show you. Once you get a violation, so you see the swing move, right here on the daily time frame. This swing move is a trend on its own on the 8-hour time frame. Once you get a violation of this trend on the 8-hour time frame, you get a violation. What price tends to do, it tends to deliver prices again to the next time frame higher, which in this case we're looking at the daily. And as it delivers to this higher time frame, we're looking at the same thing. This area right here is the pivot point thing. So because we have the pivot point set already from the first origin and that first point, so as price comes to an area like this, at the back of my mind thing, I'm like, okay, I'm waiting for sales. So now, Anthony, look at this. In as much as we had prices trading above 110, so this is how you could avoid a loss around here. So price went above 110 right here. So prices came above 110, correct?
Yeah.
So instead of you looking for buys, just like some people say, all right, price has gone above 110 and price has pulled back. So I'm looking for buys like this. So to the next psychological level. Now look at this. You can avoid this loss right here. So you can avoid this loss. So instead of looking at something like this, because you understand price is coming down and you're looking at these areas right here, you can avoid these buys.
Okay.
And instead have the sell side advantage and tell yourself, I'm not going to take these sales. because I understand what's happening from the higher time frame. I'm sorry, I'm not going to take those buys. I'm going to wait instead and look for the sells unless price does something else. Because you remember, once we had the levels plotted out initially, we were just looking at, let's say, the movement to the upside. Remember? But now you put a trend line thing, you understand the pivot point and everything. Those pivot points are very important because when price comes back to an area like that, you're expecting a reaction as well.
Yeah.
Unless price does something else. So if price then violates this area and starts moving to the upside, you need to look at, let's say, the weekly, the monthly, 3 months, and ask yourself, where is price delivering to? Correct.
Okay.
So that's how you could avoid this loss. And again, you just put yourself in a better situation where you're like, okay, I'm more inclined with the sales. Now you can make this look completely beautiful if you look at something else. If you look at the DXY.
The DXY, so what is the DXY?
The DXY is just like you comparing major currencies to the US dollar.
Oh, okay.
Is the strength of other currencies with respect to the dollar, or the dollar strength with respect to other currencies. So it's just you looking at what the United States dollar is doing with respect to other pairs. So the DXY there's something called the correlation thing. So the DXY and Euro USD, for example. So remember, you're trading Euro, you're trading US dollar, right? So you're looking at the strength of the dollar with respect to these other pairs. So if the dollar is going up, what do you expect for Euro USD? What do you expect from Euro USD? You're expecting a tank on Euro USD. Yeah. So when you look at price get into an area like this, your pivot point, right?
Yeah.
You have the psychological level thing. You're expecting prices to drop, and at the same time, if the DXY is moving to the upside, which that's what the DXY has been doing lately, the movement on the DXY to the upside, it gives you added confidence, or it just makes the read more like it's a sweeter read thing for you. It's like, all right, cool, this is better because I know what the DXY is doing. It's moving to the upside. If there is strength coming in on the DXY, it means the dollar is gaining more strength. And for this price to move down, for Euro USD to move down, I need to see some strength from the dollar. And the easiest way to understand the dollar strength is to look at the DXY. Okay. So once you start bringing these things together, you have the DXY, you have your pivot point, you have the psych level, you know you're headed to this point. But then, if the DXY has a reversal thing, so the DXY starts moving to the downside, that's an early indication this might not even get to this point. This might cap at an area like this, give you a slow movement, and you start seeing prices coming back to the upside. But again, you have an understanding, you have a plan, and so it's easy. And before, let's say this happens and this has to move again to the upside, before this happens, you've probably gone to lower time frames and you've had maybe 3 or 4 good positions in. Yeah.
Okay.
Yeah, just looking at this, I don't know why, but I think it's really, I probably should start looking at currency pairs again. I haven't traded currency pairs in a long time.
So what do you trade? What do you trade?
I do mostly indices, and I do USD in NAS 100 S&P, and I do gold. So that's it.
Oh, yeah. Okay.
This one does it moves 5 steps. Why? Because I'm looking. I paid attention to like my positions are like swing positions, and those indices they move really quick. So if I have a swing position in, I can clear, let's say, I can go through the levels easily compared to currencies. Okay. Yeah, indices move like pretty quick compared to currencies, and I just like it. So you see like this choppy play thing right here. I don't like stuff like this. I like sweeter moves like this. I don't like this choppy moves like this. But with indices, generally they just move pretty easy, clean. There's no stress thing on those indices. So it's just my preference thing as well.
Okay.
Yeah, and I just understand it better. So I just like the moves on indices. It's clean, it's easy, it moves really quick, and if I'm holding positions, it goes Like once you have the direction thing correct, it's easy. You're just trailing your stops on everything. Yeah, it's just a personal thing. But you
Yeah.
can apply the same principle on any other pair like this. Yeah, and again, you can't understand this completely in a day. No, you can't understand this completely in a day. It's gonna take you time.
Yeah.
It's gonna take some reps in just to understand. And trust me, you're looking at this right now. I haven't even shown you the setup I'm looking at to take a position. So everything I just showed you is just helping you to get this directional bias set. So I have a setup I'm looking for when I'm like before taking the entry thing. So let's say price is around here. So let's say price moves down and it gives me a pullback. I have my setup I'm looking at, and then the entry criteria and everything to take this move to the downside. So I'm not just waiting for the pullback to come and then I take the sales now. I have a setup. I have a pattern I'm looking at as well. I have certain things I need to align properly. I need to look at the DXY, look at this, pay attention to all those things. Once I see the pattern thing and then I take the sales, for example. And if I'm doing the buys, it's the same thing. So I'm not just going off of the psych level. I'm not just waiting for price to react or give me an inability at this point to take it to the next level. No, there's a setup thing I'm looking at. But once you do something like this, having the direction is very important. So you have, let's say, a 50% chance of succeeding now, just having the directional bias correct. Just knowing where this price is headed to, it's easy to take the pullbacks.
Okay, for me, what I do is that I just look at the candles and then I take a trade. This, for instance, this is UUSD. You can see that
Yeah,
it's really in a downtrend, so I'll definitely sell. And
yeah.
I use the 5 minute time frame, 5 minutes.
Okay, yeah, but you remember once we spoke and you told
Yeah.
me the stuff as well. I think I can pull this out. Let's see. So let's look at this. Let's correct certain things here, right?
Yeah.
Let's look at the first thing you're suffering with. Like you're trading everything.
Yeah.
Now it's gonna
Everything.
be very difficult for you
Oh,
once you're
okay.
starting. So I have difficulties once I start looking at multiple pairs. So you see the analysis thing I showed you on EURUSD. I
Yeah.
like that move right now, dropping to the downside, and the DXY moving to the upside. I like it. But if I start looking at Euro USD, I'm looking at too many pairs. So your attention is that it's like you're putting your focus everywhere and it becomes very difficult. So what you can do, we'll look at the first point, this one. So the first thing is you need to narrow your pairs, the pairs you're looking at. So pick
Okay.
maybe 1 to 2 or 3 max. Do you swing trade or you do scalps? Are you swing trade and you're scalping?
I do scalping.
Alright. Alright, cool. If you're scalping, pick one pair. Pick Euro USD, for example. Just stay with Euro USD and understand it. Yeah. So how much time do you have to sit on the charts daily?
Okay, it's like after I close from work, around I think around 7 p.m. Then
7 p.m. UK time is, yeah.
yeah, UK time, yeah. Then
Okay.
I will sit on the chat. Then I'll just come through all the pairs and check which one that I see a setup.
Okay.
Yeah. So when I see a setup on the maybe the 5 minute time frame, then I buy or sell. Then
Alright,
I
cool.
take profit. I think when maybe 1 hour time or maybe 30 minutes time.
So here's a quick question for you. When you come back from work thing, you're looking
Yeah.
at 7 p.m. ish, right?
Yeah.
So you're looking at 7 p.m. UK time, for example. Quick question. At 7 p.m., what session are you trading?
I think 7 p.m. is I think the New York session is coming down and
It's coming
then
to an end.
yeah, coming to an end. There is no liquidity.
There's no
And
liquidity, there's no volume
then
and stuff like that. So you're scalping during a period when price is really not moving like that. Occasionally, you see price movement, but you won't see price moving. So here's my recommendation for you. Don't look at this time to go in with scalps. Switch it a little bit. Switch it a little bit. Look at higher time frames. Right?
Okay.
Look at higher time frames. Look at the daily. Look at the 8 hours, the 4 hours, and then the hourly. Start taking positions on the hourly time frame. You can hold these positions and go to work, come back, and instead of sitting around 7 p.m. and looking for scalps, you come back at 7 p.m. and just look at where prices are, and you're just managing your positions, and you can go to sleep. And then you wake up the next day. So you're not coming back from work to scalp 20 or 30 pips. You're just coming back to look at where the trade is at. Switch it. Now, once you have it, like, if you're trying to scalp, you want volume, you want liquidity, you want early London session, early New York session, and stuff like that. Not mostly the Asian session because it's a little bit slow. So switch it up. So the first thing, the pairs. Now, if you want to look at higher time frames, you can just do one pair because you won't see a setup easily. It's going to be difficult. So if you're doing higher time frames, which is my recommendation, especially for people who's working, like if you have a 9 to 5 thing, mate, look at higher time frames, right? When you look at higher time frames, take 1 to 3 pairs, 1 to 3, maybe EURUSD, GBP, AUD. Just take your pairs that you like, and you start looking at those pairs. So you can hold your positions in for like 3-4 days of it, right? So I'll show you something. So you're looking at this. So 1 to 3 pairs, higher time frames, 1 to 3 pairs. You're still doing price action. I've shown you my system thing. So look at this. Look at this move right here. So let's say you was looking at this move right here. You could step down to lower time. This is not difficult, right? Look at this. Step down to like the 4 hour. I'll take this out. All you have to do is interpret this price movement, interpret this pullback, and you look for entries. Same thing, a movement to the downside, look for the interpretation right here, and you look for entries. So on the daily time frame, I showed you one position in, right? I showed you, let's say something like this, and prices headed to the downside. This is what you're looking on the daily time frame, correct? And we had the stop around here, maybe 1:4-ish. But you can take this out on lower time frames. Let's say on the 4 hours, you're looking at stuff like this. 1:6, right?
Yeah.
First one, you're looking at this. One is to 4 and stuff like this. So you're waiting for, let's say, you're waiting for the next consolidation or the proper pullback thing, and you're waiting for another sell. Now this becomes very easy, and you're waiting for stuff like this. So this becomes easy for you. So you can go to work and come back like you're stress-free. You're stress-free. You can even refine this and step down to the hourly time frame. So the same movement I showed you on the daily time frame, which was one position in, almost 4%. If you can do it properly, you're looking at 6, 4. So let's say you get just 2 positions. This is 10%. When you funded accounting, you've hit a lot well. 10 quid right there. Does it make sense?
Yeah. It really makes sense. Yeah.
This is going to be easy for you, and it's going to give you time to understand the price movement and everything. It's going to give you time to go to work, come back, and you're not glued on your screen like this every time.
So how did you learn how to trade?
About many people, man, like many. I just went through different, how can I put, like different mentors, and I picked 1 or 2 things from different persons. So I learned price action here, learned pattern recognition, and I learned a lot. Even the recent Wyckoff theory, I've gone through. I think I studied smart money concepts as well, but I looked at all those things, and the only thing that made sense to me at the end of the period of my learning curve thing was just the cycle levels on the trend line. For some reason, I just understood it. And it's not that those other things don't work. It works, but this is what makes sense to me.
Did you come up with those ideas, or you got that one from a mentor?
I think what I'm doing right now, this is like my ideas.
Your
But
ideas.
understand it, yeah, this is like my ideas, and some of the names or some things I'm saying, you might not even see in the textbook thing properly like that. Because what I'm calling a pivot point, people call it differently. So they're looking at different things as a pivot point, but for me, that's a pivot point. So this way of trading like this is my idea thing. This is how. So I've learned from different people, and then I've put everything together, and now I have it like my own system thing. So this is my way of looking at the directional bias thing. It's my way of doing it
Yeah,
because
I
I
think
understand it this way.
that's really the best, because if you've picked some ideas from two people and then combine them, and then you've been able to generate your own idea, it's really good
Yeah,
thing, because
it's
you,
just
you,
my way
you,
of
you
looking at
really
it.
you really understand properly in your own way.
Yeah, and trust me, the person I even like the people I learn from sometimes, the way they look at price action. So they look at price action without even using trend lines. And I think if he sees me using a trend line today, he's like, "Do you even study from me?" Because he was like not that he was against trend lines, but he's like, trend line is a little bit archaic. It's like, oh, it's just so it's like price does not react, price does not move because of a trend line, which I understand. Price is not moving because of a trend line, but for me, it helps me with my visual representation. So in as much as he's telling me this, it helps me with my visual representation. I'm a very visual person. I need to see the side levels on my chart. I need to see my trend line thing. Then I need to see a pattern within all of these things. So that's what gels with me. So I've learned this price action thing. I've learned pattern recognition. I've learned all these things. But this is what works for me. Now you can look at fair value gaps, you can look at liquidity sweeps, you can look at smart money, Wyckoff, you can look at advanced pattern things like butterfly, Gadley, ciphers. You can look at those things. If it gels with you, if it makes sense to you, go ahead and do it. But I just wanted something that's simple. I don't know, for some reason, when I break down everything, it boiled down to this. And ever since I started looking at price this way, it's made it so easy for me. Like for some reason, this is what works for me. Yeah, I can't even. This is what works for me, and I just use it this way. But I'm very grateful to the people I learned from. So yeah.
So on your normal day, how do you trade?
I'll probably get a position in. Let's say I don't have a fixed time when I look at positions. So sometimes I might get a position or I might get an entry signal when I'm about to sleep. And it's something I've been tracking, let's say, for 2 weeks. So let's say I've been looking at this position right here. I was looking for sales here. I might have been tracking this movement all the way to here. So when this happens, the entry might be right around the time when I'm about to sleep. So just like you when you're coming back from work thing.
Yeah.
Let's say 7, 8 p.m. UK time. So I'm gonna get my entries in right here. So my entries are always random. I don't have a fixed time. So when I'm tracking the movement thing, I keep tracking it and I know when it's gonna set up properly. So I'm looking at it every now and then, every now and then. Once I see the entry, then I get my entry. This can be random as well. Yeah. So if I get my entry around here, it can be 10 p.m. UK time. It can be 11 p.m. UK time. Sometimes it's 1 a.m. So I'm just up doing my stuff and I know there's a position I'm waiting for. I get my entries, then I go to sleep, and then that's it. Now I start every day when I wake up in the morning. I look at the consolidation thing. I look at the spike. I'm like, all right, cool. Prices started moving. All I have to do is go do my things. Maybe go do spots. Go do any other thing, but not looking for another positioning. And I wait. So I wait to see if price is gonna stop me out right here, or if price is gonna move in my favor thing. And I start managing the position. So at this point, I'm waiting to see the movement to see if I can bring my stop loss to break even. So the most important thing is studying the price action before the entry. And sometimes
So
it might take a week just to get that movement or to see that thing, or maybe a couple of days, maybe 2-3 days for it to set up properly. Then I get the entry and then I start the management of the position.
okay, so for the middle trade, at what point will you move your stop loss to break even?
There are many ways you can do it. So I'll show you a couple of. So I have different ways I'll do it. It depends on the price action. It's not fixed to. I'm not doing like a fixed one every time. So for example, when you get in here, right?
Yeah.
Price starts moving, it consolidates. So if you move your stop loss too quick, you see price coming back to stop you at break even, and you see the movement thing going. You see. So if you wait for this to happen, you get this impulse. So now I can bring my stops to break even because I've seen this intent from the sellers. Again, you can wait for this consolidation to come in, and you wait for another drop. At this point, you can still bring your stop loss to break even.
Okay.
So as price starts making new structure lows, then you can protect your capital. You take your stop loss on break even, you bring it to an area like this. Now you've probably secured about 0. Let's see. At this point, you've secured about 0.7%. You see, as price starts making new structure lows, you bring in your stop loss again to lower points. It depends on the structure thing. So sometimes when I look at it, the price action thing, then I have to decide, because you're looking at certain periods. So there's sometimes when this price is going to move and pull back like this, move and pull back like this. There's sometimes the price is going to move and give you a consolidation. So it moves, it consolidates, and then it moves, it consolidates. So I'll manage this differently depending on the price action thing I'm saying. So once I get an entry, for example, the next thing is managing the position, breaking even, taking profits or locking profits. I don't take profits out. I just lock the profits and let price take me out. That's the easiest one for me. Yeah, I don't like scaling out. No, I don't like scaling out.
So, do you use a market order or you use limit order?
I just go in, I use a market order thing. So if I'm sat and I look at my entry and I've been tracking this and everything and I'm ready to get in here, I'll just go in once I see price lining up properly. Because trust me, when I look at the position, I've been watching it for some time. So once I look at it and I know, that's why you see my candlesticks is all blue. I don't have red and green because it's just I'm looking at price. Once I see the price action, I see the pattern thing, I'm looking at, all right, cool, and then I'm getting in. I just go in. So let's say if I'm not around, right, and I know probably I'll be slipping and price is around here, I might use a pending order to get in here. Yeah, sometimes, but it's occasionally, not all the time. So occasionally I'll use a pending order. Yeah, but I like seeing the price where it's at, and I just go in and then I walk away. Yeah.
Okay.
Cool.
So, how long have you been trading?
I think I started around 2014, 2015, just dabbling in and out a little bit, and it was quite difficult at the time because I didn't have like the capital. But then I had to dedicate some time just to study. So it took me some time. It took me like 5-7 years just to get an understanding of everything, because the capital thing was not even there. So I wasn't even focused on going like crazy. So you're looking at 2014, 15, maybe 5 years in. But one thing I'll say is I wasn't really consistent with the studies during that 5-year period. So there was periods when I'll stay away for like 3 months without really going full time and putting in all the work and everything. So it took me a longer time. And once I had the possibility then to pay for mentorship or to pay for courses and stuff like that, now you can look at my period like 2015 all the way to like 2020. You see all that period thing.
Yeah.
I was just studying and struggling and stuff like that. So yeah, I think my study thing took me like 5 years ish. I think around 5 years. Yeah, so it was a struggle thing for me, man. Struggle.
Yeah. So like, how long averagely do you think it takes someone to reach the level that you are? Because I'm really new and I'm struggling.
It's gonna take as much time as you put the effort in. But for sure, like just understanding the technical and understanding this directional thing, I've shown you this in less than an hour. But this doesn't mean you can trade. It's far from trading. So this thing, once you start practicing it, it can take you maybe 6 months to understand these two concepts. It can take you a year
6 months.
even. 6 months, it can take you 6 months to a year to get the full understanding and to grasp
Really?
fully. Yeah. You can.
But
So
now, I've
you
got a
might look
question.
at this and think it's easy.
Yeah, for
It
now.
looks easy when we're doing it like this in hindsight because the charts are played out already. If I now look at this, for you to play this piece right here to the downside, just this area from here to here, you might think it's easy, but once you start taking those positions, you get the first position is a loss, second is a loss, it's going to mess with your psyche. Once your psyche is messed up, then your whole read becomes messed up. So it's not just this, it's not just the technical. It's easy to understand the technical, but there's another part where your psychology comes in. It's a big part. I can't tell you how long it's going to take for your psychology to align properly. For some people, it can take 5 years. But for me, it's never been about the psychology because I've always been a very patient person. And I think that's why I'm very much inclined to swing trading. But it was more about understanding price action, understanding the technicalities of how price is moving. So I had to understand it to a point where I feel comfortable holding positions for longer periods. I feel comfortable calling out certain trades and stuff like that. So it's different for every person. I've seen people make it in less than 3 months. I've seen people
Really?
make it in 7 years.
Wow.
Yeah, but the the duration is different for every person. I can tell you, I can put a day, I can put hours to it. Mine has taken me like 5 years, 5 to 6 to 7 years. I can't even count at this point. But when you look at it, after the 5, 6, 7 year thing, you're not even looking at the years before. You're just looking at what you're having right now, like the aftermath of it. If you ask me if I'm even conscious or even aware it took me that long up, I'll say no, because now I'm seeing this part of it, and I've totally forgotten about the before even like that. So yeah. I don't know how long it's gonna take you. I don't know how much time you put on studying. I don't know how much time you put on practicing. So I practice every time till this day. I still practice. Like I'll be
Why?
sat. That's why I tell you sometimes I'll see positions in around 1 a.m., 2 a.m. and I'll take it because I'm just sat there just doing reps in. So I can pick a random pair like this and I'll start doing my reps in. Put my side level, put my trend line on different pairs just to understand the system to make sure it's still working. So look at this thing, like like the Prem thing, the Premier League thing. Them guys are playing on Saturdays and Sundays mostly, right? But from Monday to Tuesday, like Monday to Friday, what they're doing, they're practicing. Correct?
Yeah.
Monday, Tuesday, they're just practicing. They're just practicing. It's the same thing. You
Okay.
need to practice all the time.
So like what you're trying to recommend is that I should practice more and more, right?
Yeah, it's not even trying to recommend. It's what you're supposed to do. Like it becomes second nature to you. Yeah, you see the same thing, just side levels and trend lines. Somebody's going to tell you, all right, it looks simple, and you're not supposed to put so much time into it and stuff like that. But trust me, I'm putting in many reps, just understanding. Sometimes I'll pick my chart like this and ask myself, is my pivot point set correctly? And I'll start looking at the whole structure thing again, making sure everything looks correct. I'll pick another pair. I'll go from the S&P, go to NAS, do the same thing. Put my side levels again, look at the levels, look at the price action between. Am I comfortable with this price action? And then I look at the time, I start understanding and then I'm asking myself, is price coming into a consolidation or the range? You need to put the reps in every time. You need to put the reps in. So it's not just having the side levels and walking away. You need to have the side levels, come back, practice, come back, practice. Sometimes, so if I miss this position right here, so let's say I didn't take the sales, I need to come back and ask myself, what was the possibility or what signs or what things could I look for to help me take this position right here? So let's say I missed it. I need to come back and do like a post-analysis thing just to understand why I didn't take this position right here and why I need to wait for this one. So when I see this now, understanding what happened here already, I'm going in like crazy here. Not with the lot size thing, I just mean with the confidence. And then I'm waiting for the next one. So this is something you can do as well. When you put in the reps in, you can already look for, let's say, part of the rep thing is just you doing, so you can do the focus thing. You're anticipating before the move even happens. So you sat here, you're looking at this movement to the downside, you're looking at the pullback thing, which comes in like this. So you're looking at the same thing, the pullback thing, you're looking at this period right here. So you're looking at this move, maybe that spike, you're looking for the entry thing. Now this is going to look like this. You get an impulse, you get a correction, and you're waiting for this move again to the downside. You see, so when I tell you, so if I was trading this, I would look for my pattern within this area, and maybe I'm waiting for prices to get here and I sell. So this hasn't happened, but I'm already preparing. So I'm already anticipating the move. I'm playing the pattern thing out. I'm playing it in my brain already. I'm looking at it. So once it happens, I'm just going in. And it can happen at any time. So this can line up maybe in 3 days from now. It can line up in 2 days from now, and I'll take the sales. But I'm not trading EURUSD. I'm just showing you as an example thing. Right? Yeah, so there's a lot you have to do. Now, to make it easy for you, pick one system and work with. Don't play with, like, don't go from one system to the next, one system to the next, one system to the next. Don't do something like that. It's gonna derail you. It's gonna throw you, like, you lose your bearings. You just get lost within it. Pick a common, like, pick a system that's easy. You pay attention to that system and you work with it. Does it make sense? Don't be everywhere. Yeah. Don't be everywhere. Stick to it. So you look at the market focus thing. I've done that focus on this on my page for close to 1 year. I haven't switched anything. I've been very consistent. Psych level trend line, psych level trend line. Every time I look at it, psych level trend line, psych level trend line, psych level trend line, pivot point swing move, pivot point swing move. You know how long I've been looking at it? It's like second nature thing to me. It's easy now. You can wake me up from sleep and I'll tell you what I'm looking at, where I'm expecting price to go to, the pattern I'm waiting for to form, and that's it. So I'll stop sharing this for now. Yeah.
So how many positions do you hold at a time?
It depends on price. It depends on what price is showing me. Sometimes I'll take one position from one level, taking it to the next side. Sometimes if I get a scaling, I'll get a scaling as well. But I need price to show me. There's certain things I'm looking at. I have rules around scaling in. So for example, look at this. You see this movement here? You see this push consolidation? If this was my entry right here, I could look for the same thing. Movement, push, consolidation, and I'll look for this. So this will be trade number 1. And this will be trade number 2. So I'm taking prices all the way to this area. So I have 2 positions in.
Okay.
Yeah.
So what is your win ratio?
30%.
What?
I'm right around 27 to 30%.
Really?
So I'm wrong. Yeah, I'm wrong 7 times out of 10. I'm wrong.
So that means that when you win, you win big, right?
Yeah. When I win big. So sometimes when I win, my average risk to reward sometimes is about 1:4.
Oh, wow.
Yeah. So when I get a good trade, you're looking at something like this. Yeah. You're looking at that as a good trade thing for me. This right here is like 4%. This is like 3.4. So this is something. So let's say the previous one I took a loss. So let's say I've had 1, 2, 3 losses, and then I have this as a win, this as a win. I'm still in a good spot. So this trade right here is going to take out those 3 losses, and this one is going to put me up, let's say 4%. Make sense? So let's stop sharing for now. We've taken so much time.
Yeah.
We've taken so much time. So I hope you found it interesting.
Yeah.
Nice.
I think that's gonna help me a lot.